Hello, Warriors. Mary, Bran, how are you? Ingmar, how's it going? Everyone doing all right?
Coach, how are you doing?
It's the same.
Oh man, seriously?
Yeah. So
Jeez, man.
it's all right. You know, I don't get
That's
sick that often.
yeah, no, you don't. It's a shame that you're,
The
sick ahead of the
holidays.
holidays. I know it's
Yeah.
like I don't know about your wife, but I know you're Jewish and you're celebrating Hanukkah, and I don't know how much you guys celebrate the Christmas holidays, but it's a shame. My mom has COVID,
Oh gosh.
and then it actually went from my sister to my mom, and my stepfather, and they're in their 70s, and they're both struggling at the moment. They're fine, they're on therapeutics, but we're going to miss them through the holidays, which that's the bummer. That's the bummer
Yeah.
part of it. I mean, it's bummer getting
Yeah.
sick, but it's more of a bummer not being able to forge those
Everything's
memories.
timing.
Yeah. So it's tough. Yeah, so hey, first of all, I can take the charts whenever you want. But you know what
Okay.
I ended up with today, Dale?
What, buddy?
I went into all cash. I actually
Wow.
took off. I was long some euro sterling. I just took that off because we're up against the highs. Who brought it to my attention is K-Man. Even though he's not here right at this moment, he was in the chat room. He's like, "Hey, I forgot I had this on. I'm going to take the rest of it off." And I'm like I was looking at the charts this morning, and I said, "Shoot, I'm going to take mine off too, as we're right up against resistance."
What a great trade from here.
Yeah, I mean, it was it was the remainders from last week following that Bank of England, Bank of European Central Bank meeting, because it was the obvious, like, the ECB was hawkish, the Bank of England. You were like, what? Did they just really not all in favor vote for all hikes? And when they didn't, it was like, dude, that was a green light. That was the green light last week. And so but now that it's gone as far as it has, it's really close to like an AB equals CD completion. And it's obviously we're up against resistance. So you just gotta, like, I don't care at this stage if it runs another 50 pips. It's like I took what I needed out of it, and I got more than I thought I was going to. So
Are you going to stay in cash through the holidays? Because that would be unusual for you.
That is unusual. Well, I think a lot of it depends with what happens with the unemployment numbers today, the GDP numbers. I mean, I know it's a final GDP number, but it can also alter, how people approach the next week. I'd like to see some really weak data, and if we get some weak data that might allow for the dollar to stay under a little bit of pressure, and we could see stocks climb here. So that's kind of what I hope to see, and I don't know if we're going to see it, but that would encourage me to be like, no, well, maybe I'll keep buying the euro or something, because the euro is not breaking back below 106. That's the thing.
Yeah, it really is tough. Still think it may pull back to here, but it's definitely it's like a beach ball.
It is.
I've seen some counts that we could pull back to here, and then make a move towards 111. So I bet Greg is going to confirm that.
Yeah, before I let we let Grega take over, I wanted to just discuss a couple other things too.
Grab the charts, bro.
Okay, well, I wanted to, well, here, I'll point this out, and Greg, glad you're here. This by you being here really prevents Stelios from talking at all, which is always a pleasure in my view. Just kidding.
I hate that guy.
Just kidding. No, I got to give you a chance to speak, and we got to give you a chance to speak, because you didn't get to rattle off during the flow show today, since the flow show's done until the new year. So any thoughts that you had overnight, other than
what did you dream last night?
I dreamt that Blake going all cash means he's going to spend some money on me. No, I'm kidding.
That's a good.
I am still bullish to euro pound.
Are you looking for a sugar daddy, Stelio?
Yeah.
He's already got. He already got.
Mama.
I can be your sugar daddy for the Christmas period.
You're younger than me, man. Anyway, so I'm still bearish the pound. I do agree that we're getting close to resistance on the euro pound, but I mean, we called it right when the Bank of England met and they had 2 votes of no change. I mean, that was a clear sign in my opinion. We said it, and I'm still bullish euro pound. We might retreat a little bit, but I think we're going to 90. I said that yesterday, and it's moved again today. Now in other. The euro is still strong, and remember the ECB was on the hawkish side, quite hawkish actually. They kind of told us they're doing like 3 more 50s, which I seriously doubt they're going to do that, but that's what they're telling us. So so the market, I think, is going to continue to provide support for the euro.
It's crazy how the euro has not. I mean, this is what I was just saying, that it's like, dude, if it's not going to go down. Like like I keep thinking we're gonna, as soon as we crack 105.80, I'm gonna short it, but it's not breaking it. And if stocks start moving higher, you kind of got to go long the euro. I don't see any reason why you shouldn't.
Yep, I agree. It looks strong, and like you said, it's not breaking down. Then again, getting this close to Christmas and year end, we're going to get intraday movements which are low liquidity, might not make a lot of sense. So I'll be careful. If any other time of the year, you break below this level that you said, what is it? That 105.80. Yeah, roughly. There you go. Yeah. If you break down below that, that's an important technical breakdown. But these days now, it's not as clear because, as I said, you do get these flows which are can be very short term. So I'd just be a little bit more cautious and definitely trade smaller size than usual these days.
Mike asked, what about the Christmas rally? Look, we've rallied from where I thought we were going to rally from midweek from the week ahead video. I thought we were going to rally from midweek, which we rallied yesterday, did a turnaround Tuesday, Dale Classic. We got really close to that 3,900, and look, I think it's still, I think it's still a good chance that we rally above that resistance. However, I'm gonna tell you what I told the ForexAnalytix community yesterday during the daily roundup. Now, if you guys don't know what the daily roundup is, we have a couple of different shows that we do throughout the course of the day. We have the flow show, we have the F.A.C.E show, we have the daily roundup, we have F.A.C.E right after this. So like as soon as we're done here, we go through all the analysis, through all the majors, and then Steve gets to talk for like 14 hours straight on fundamentals. Just kidding, Steve. He talks about him and Stelios like go over like really in-depth topics with all of our traders, and then we fill out this bias chart. But during the daily roundup yesterday, this is what I told everybody. Since it is Christmas, I'm going to tell you, Mike, and I'm going to tell you everybody else that's listening in. You know what's going to really screw the market is if a rally doesn't materialize. Everybody, I mean, there is not one person that I have heard from, talked to, watched on, that's a portfolio manager or you're an asset manager that I've seen on social media. I have not seen one that is not preparing for an end of year rally. They're just oozing at the mouth, drooling, like just waiting for this week to end and get long equities going into the next couple of, next week and a half. And you know what will just really screw the market?
If none of that happens.
If none of that happens and we go back and we see 3,700, by the next week, that would absolutely destroy the market. Now, I'm not prepared for that, meaning I'm in cash right now, so I'm not like actively thinking that way. I'm just saying that that's possible. I don't think that's impossible, especially under what's happening right now. And guess what happens tomorrow morning at this time, literally 24 hours and 20 minutes from right now? The PCE data, which is the Fed's most, hailed and scrutinized, preferred inflation print that comes out. That's tomorrow.
Course, it's the one that understates inflation the most.
Right. So, so anyway, yeah, exactly. That's a good point. Hey, but I know we could go on forever and ever and ever, but I don't want to take away from Grega Horvat because he kicked his kids and his family to the curb today ahead of the holidays to spend it with us to show you some.
He would have done that anyhow. He really doesn't like them that much.
That's because you're his sugar daddy too, Steve.
Yes.
So, Grega.
Yep.
Let's bring you in, man. What well, first of all, what's Santa bringing for your kids?
Well, we have present for my daughter, but for my kid, for Vit, we still don't know yet because he don't need anything, but he's 10 years old, so and he is fine with everything. So
it's funny, Grega. This is, and Steve and Stel, you guys can appreciate this since you guys all celebrate Christmas. A few years ago now, my kids are old enough now that they, we don't necessarily have to buy them like Santa gifts, nor does it matter. But like over the last few years, my wife had been like, I'm like, okay, well, here we got the big gift, so that one's from Santa. She's like, screw that, man. I don't want Santa to take credit for that. Those are from us. Let's give the Santa gifts will be smaller gifts. And I'm like, dang, but come on, Santa's got to be like, in their eyes, Santa's got to be cool. And I'm like, oh, well, screw it. So we're cool. They're not. Santa's not.
Actually, my wife suggested that because my Vit loves ski jumping. Okay, so we have one of the biggest ski jumps here in Slovenia, and it's held, I believe, in April. And we are actually planning to buy him tickets.
Ooh, that'll be awesome, dude. That would be so cool.
Yeah, so
Santa would be rocking it. All right, man. Well, hey, let's get off Santa talk. What do you what you looking at here, and how do you feel going into
since you talked about Christmas rally? Well, we have to consider that market made a pretty strong bounce.
I'm going to let you take over the charts.
Yeah, pretty strong bounce despite high rates. So actually, what we have seen is that was on the S&P 500 from October low. It was still, a 20% bounce. So that's a pretty good move to considering what kind of period of policy we are. And then you have here German DAX.
That is a German DAX hell of a bounce.
Yeah,
wow.
Here was also, it wasn't, I thought it's a bit more extended move, but still 25% from the low. So we have to consider that it was still a very strong bounce, and maybe there were some position adjustment, as you talked already last time, for managers to grab at least some piece of the cake, because after all, a lot of assets were down through the year. So maybe going into the year end, if we consider that it was a pretty strong move, maybe it will not be the Christmas rally like someone would expect. So from an Elliott wave perspective, I also think that we could keep consolidating here. Here I updated the charts. We still rejected these prices at the upper trend line of that very important channel. So for now, technically, we are still in downtrend, but from a minimum perspective, I would expect that we could retest maybe 3070 around there, 750, or maybe even 3660. There you have a 61.8% and 78.6%. Also, this drop was quite strong. I firstly thought that was already final leg of a correction, that we will see a break higher. But as I said, moving also into these Christmas holidays, I think that markets could be a little bit slow, and this could be perfect for wave B to unfold. So the ideal scenario would be that we just keep consolidating, and then in January we see a break to the upside. Okay, that's something that I'm have in mind. Also, looking here at German DAX, that's a pretty strong sell-off and very impulsive. It means it's the first leg of a higher degree correction. So again, I think that there can be easily more weakness coming. I know that that's index, it's not the futures, but on the futures we got a pretty big volume down here from November 10. I'm not really sure what happened back then, but it was a very strong break higher. And normally this can be fully retraced. We came pretty close, but still, since we have only wave A down, I think that wave C could make another retest of this very important level here. So
could you imagine if we just rolled over like the S&P, you know, and the DAX just roll? I mean, I think that would really, really catch the market off guard.
Yeah.
I mean,
so Grega, you expect the October lows to hold?
Yeah, definitely. Okay. I mean, here on DAX, definitely.
No, I mean on the S&Ps.
Yeah, I mean, there is a chance. I'm interested to see what will happen down here. I already talked this with Blake last time, that I want to see the response here at the 61.8%, because after all, technically, we are still in downtrend. And I also cannot ignore this wave count either. Okay.
That's what I'm looking for.
Hey, Grega, Jonathan asked, he asked if you look at the FTSE at all, and I don't that often, but do you have that chart available?
I can take a look.
Yeah, I mean, the good thing about Grega, Jonathan, is Grega can, you know, pull it up and then put some counts together really quick. Yeah, on the fly, which is nice. Yeah.
Well, this one
FTSE,
is
the FTSE.
He's playing FTSE with the FTSE. Dale, you're so funny.
So here we have a pretty nice ongoing recovery. It definitely looks like we are just in consolidation here. So from a basic perspective, markets moves in Elliott wave terms in 5 waves, and that was one very big correction here. And here we have the next correction. So I think that these markets could be higher next year, and that we could be breaking this very strong resistance up here. Also, maybe if you look at this, I'm sure that you see potential right shoulder here. So here was the left hat and the right shoulder. So as long as we are holding this again, this was the same October low. I think that we should be aware of more upside. Now looking at the more intraday or closer look, let me do the 4 hour here. Again, this appears like a very nice ongoing impulse. We had a pretty strong sell-off. Not really convinced that this was the end of a correction. So, but if we see a dip here below that level, I think that there would be a good support.
And Jonathan's looking for a short, and I mean, but I guess the way you can always view like being short up here is, you know, where your risk is, right? Like it's clearly defined.
If we are in a corrective period here, just short term, then definitely you would expect that this 76.20 will hold. So that's the important level up here. If we break that, then we would also at the same time broke probably this resistance as well, which was actually still in place here from August highs.
Okay. Thank you very much. And before we go on, Grega, can you hold 1 second? Steve, are you here?
No, I'm not.
Okay. This is the FTSE is a great mark, but I'm going to give you guys a little bit of holiday cheer for 30 seconds. So Steve came to the United States from Athens, Greece with his family. They stayed with our family for like 10 days this year. We had dinner over my in-laws, my father-in-law's house. My father-in-law is Greek. So we were at the table, and he had some friends that were in from New York he had some friends that were in from New York that were also visiting, and for like several days, and they were staying in a hotel nearby. So anyway, we're all at dinner. My father-in-law is a Greek. He's hosting dinner, and he's so happy to have all these Greeks and at his dinner table. So the 3 of them were at the head of the table of this very big, long table. There's like probably 15 of us there. I was on the other side I was at the other head of the table on the other side. And I hear, I look at my father-in-law who's sitting at the head of the table. He has this very funny look on his face. And Steve's looking at his other friend that's over on the other side of the table. And Steve starts laughing, and then my father-in-law was all perplexed, and then they all started laughing. And apparently Steve was playing footsie with his friend, but he thought he was playing footsie with his friend, but he was playing footsie with my father-in-law, who's a 77-year-old man, and my father-in-law could not figure out why Steve, the pervert, was playing footsie with him. Anyway, it was the funniest thing in the world, and I still laugh at this day. To this day, it's funny. Anyway, sorry, I had to tell the story, Steve. It was so great.
No, I'm 100% with you. It's really funny.
Anyway, sorry, Grega, go ahead.
Yeah. Okay, so since we mentioned that we could be headed for a deeper correction here after some sideways price action through holidays, I'm still thinking that euro dollar could experience some setback here into this wave 4. Of course, it may easily jump to a new high from here, but looking from a potential long opportunities, I would rather wait on lower supers to be retested. We had this very nice extended leg to the upside into this FIP target typical for a wave 3. It's a 261.8% extension of this first leg here. So the ideal support would be around 103. If we can't get towards this level in the upcoming weeks, then I think that there could be a very nice support for the euro, as you mentioned earlier, because of the ECB is going probably for more hikes, so much more hawkish than Fed, and this could leave this upturn still in play. Also, if we take a look on dollar yen, I'm not sure, Blake, if you shared this link to our blog post yet.
Oh, not yet, but thank you. I'll do it right now while you're talking.
Yeah, I mean, me and Blake, we made this blog post for dollar yen, both for some technical analysis. So it was a pretty nice reversal to the downside. We have a very strong move, clearly impulsive. So any recovery in 3 waves is the next short, in my opinion. I'm not sure if this will happen here from 1030 or maybe even lower prices, but the idea is whenever you see the 3-wave rise, just be aware that there can be a new sell-off. Of course, the ideal bounce is from here, from current levels or slightly lower, because this could also be, if I hide this a little bit, this could be a left shoulder, the head, and potentially if we hold this support, you could see the right shoulder to unfold, right? So, of course, we will see the inflation data when for Japan.
The inflation data?
Yeah.
That's tonight, but it's interesting. A lot of people ask if the data is going to start moving, the yen moving forward, and now they are attempting to come off negative rates or the zero bound. You might actually start to see data move the yen a little bit. So yeah, that you'll see that tonight.
Yeah, so if we get suddenly, probably they are worried about the inflation. If this inflation will be again higher, I think that we can assume that obviously the yen will again bounce. And if you also look here, you can see here I have the inflation data in Japan, and then you have here the US inflation data. So obviously they are diverging right now, and obviously this could keep dollar yen in a very strong bearish trend, especially if this inflation in Japan will jump even higher. So I think it's a very nice reversal, and think that we will see much more weakness in 2023 on this pair. But as I said, after the next bounce, that should be the most exciting to see. Also, let's take a look on crude oil. We talked about this crude oil a lot. We track this wedge pattern here, very nice response here from the lower side, and it looks like that we are now trying to trade the upper side of this wedge pattern. So we'll see if we can break this one, but for now looks like that there can be room for 82, 83. It was this swing high back from the start of December, so looking for a retest of this level, and then let's see if this is going to be only a 3-wave recovery, or maybe if we can break this, it could easily become even wave 3. So this could be quite interesting, at least for the short term. But looking at the big picture here, once again, I mean, I think that we are here stepping into this very big corrective phase since we reached this top here in February or March. So that was before that we had a very nice, clear, impulsive rise, very strong moves. And we know that after such a price action, you will typically see that price will try to stabilize. So there could be some back and forth move here. in 2023, but still very volatile in my opinion. So watch out for these supports on the downside. Around $50 to $60 is a big level. On the upside, definitely around 100. Also, let's take a look on gold. Gold, if we look at the big picture here, since it's end of the year, well, I still think that this price action from these highs is corrective. It was pretty bearish, but still we managed to hold these supports around 1600. We have a pretty nice bounce here. So in my opinion, this still could be a flat correction in a wave 4. This upper trend line of this base channel that was broken here back in March 2020, it came back down to the same line. We are now responding to the upside. At the same time, we have here at the bottom US yields trying to form a top of this wave 5. So in my opinion, even if yields will stay sideways or maybe even move to the downside, who knows, I think that this is quite a good bullish case for metals. At least as long as we are holding this 1600, I will not change my views. I still think that there are going to be a buy the dip scenarios in upcoming year. Also, let's take a look on silver as well.
Silver's going to 1,000, right? I'm kidding.
at the very least.
Oh God, here we go again.
But not in dollars, right?
Turkish lira,
in Bitcoin. That's correct.
But still, we have a pretty big upside potential here. That was a very nice reversal, as you know, from that low, pandemic low. Then we had a very solid pullback. These supports here did the job very good. I think that we have a very strong reversal higher. And if you, again, just respect the price action, this is clearly a corrective while the previous bounce was impulsive. So we can expect next leg again to unfold in the same direction like the first strong one here. So I think that looking at the projections, there is even room for $35 here. So I think that I will be bull here for silver as well going into 2023. Let's take a look also here on some shorter term time frames.
The only worry I have is that I'm reading lots of people posting and saying that 2023 is going to be the year for precious metals going a lot higher. So that worries me. That worries me a lot.
Yeah, I mean, maybe we will get then some kind of a mania shock to the upside. Now imagine if that's what you see from the crowd, what will happen if we break 30? Then we probably will be even more optimistic, and that's where we should be very careful. That's why I'm saying around 35. I think it's a very, very big level if we get there. Potential resistance, obviously. Finally, what I have for you today is maybe Bitcoin. Just to remind you here, cryptocurrency is still in a very strong bearish trend. There's still a risk of, as we said earlier, corrections can be deeper, and if we see a deeper corrections, maybe S&P 500 will not print new lows, but still Bitcoin could. So I'm still looking at very strong supports around 12,000 to 14,000. That's the key level where the price should hold and even respond to the upside to make this very interesting wedge pattern for a bullish case to be valid. Okay, so I think that there is a chance that even cryptos will turn higher in 2023. But as I said, firstly, we still have to see these new lows to complete this pattern. Any questions?
Awesome. I was going to say, we got just less than 2 minutes before news comes out. So you have less than a minute. Do you mind if I take over really quick?
Yeah, sure. You have it.
Okay. Yeah, I just wanted to, just wanted to do that just ahead of the data. Grega, I love the views. Dale, did you have anything for Grega before?
Thank you, Grega.
Yeah.
Thank you, man. Thank you for having me.
Really, really, really great getting your views. You know, and I love the fact that you kind of, put Stelios in his place. So this way he doesn't, he can be quiet about silver for a while. Just kidding. Just kidding. All right.
We all know that that's impossible. So yes, you're kidding.
Right. Yeah. Let's pull up. We're going to put the dollar here. We're going to put over here the S&P. I'm going to put it on a 15-minute chart though. And then over here, I'm going to put up yields just to see, you know, what we're doing on the 10-year, following the data. So we got the dollar index right here. S&P is coming off a little bit. And if you go over to ForexAnalytix, let's pull up the data flash, and I'm going to move that out of the way. This is, you know, so you can see the data as it's coming out. And we have, data should be out.
Let's go. Let's
Coming.
go.
Everybody's sleeping at the wheel right now as they're like, oh, shoot, data, we got to push it through.
Oh, 3.2 GDP, that's strong. Initial jobless claim slightly better.
Oh, stocks are just not liking that. I mean, you know, here's the thing. You know, look at all of I mean,
it's all green.
Claims are strong. GDP is strong. People are not going to like that. You know, like, do you get out and get long, you know, following this news? I mean, I don't know. What are your thoughts here, guys?
I think we're going lower. I think Tony is short, and well done to him.
All right. Well, I don't know. Just remember the seasonals. But like I said, one of the things I believe that will screw this market is if we do not get a Santa Claus rally, because everybody's just drooling, waiting for it. But let's see how stocks respond here, because I spy just in my little eye a possible.
Get your euro breakdown now.
Yeah, we could go look at the euro as we're approaching that 106. But you know what? We could also be developing a complex inverted head and shoulder pattern, and that is entirely possible. So I think if the S&P can hold 3850, which is still what 5-10 points away from here, so let's say about 3850, it has a shot. But I don't know, man. I don't know if I'm ballsy enough to stick my neck out right there. I don't know. How about you guys? What do you think?
You're not ballsy enough.
Nah, you're right. Okay.
I just answered to the question that was asked.
Yes, that's correct. Hey, listen, I know the rest of the FinTwit and the rest of the market's taken some time off between now and the holidays or New Year's. But look, we're going to be here live with you tomorrow for the PCE data, so you don't want to miss that. So if you're around tomorrow trading, we're around trying to scrape up some dollars, you know, going into year end as well. So we'll see if the market can respond from here. I want to thank Grega, Steve, Stelios, and our wonderful host, even with him being sick. Dale,
he's sexy. He sounds sexy now.
Yes,
very sexy. Dale,
everything
RSV
for the show.
Voice, please.
Everything for the show. He will even get sick just to sound, you know,
the show
more
must
appealing.
go on.
The show must go on. All right, guys. Hey, make sure you check out the Trader Funding Program if you want to learn how to trade our money and not your own money. You don't want to risk your own money, or you want access to larger amounts of capital. And included, you'll be part of the ForexAnalytix community for a period of time, depending on what account you try to access. You know, this way you're not alone. You're trading in our community. So check that out. I'll put it in the chat box. Dale, Grega,
okay,
Steve, Stelios.
Ciao,
thank you, team.
Thank you.
Ciao. Bye-bye.
Thank you, team. All right, Jerry, welcome back to F.A.C.E.
All right, it's great to be here. Yeah, Dale, can you hear me okay?
Yeah, I got you loud and clear, Jerry. So you glad 2022 is winding down here?
Oh, wow. What a year, huh? This is one for the history books for sure. I mean, and, you know, after doing this now for 25 years, even 2008 now is beginning to look like a dress rehearsal.
It was a picnic. Yeah.
Sure.
Do you want to share your screen with us, Jerry? You do some great technical work, and you cover everything. So, you know, I'd like to start off with, this is the time of the year that you start looking for narratives and themes going into 2023. What's top of mind for you? So, okay, we could start here.
Well, yeah, we can certainly start with the S&P, but you know, actually, I have another chart. Let me see if you can see this one. I'm going to show this one first. Do you see the Bitcoin chart here? Okay, yeah. You see it. Okay, good. So we'll begin with Bitcoin. I heard the mention about silver and precious metals earlier. I was chuckling off the air listening to your dialogue on the topic of precious metals. You know, we sat through Dale, what was the worst episode of inflation in 40 years, and they kept pounding it into our brains every single day we turn on the financial news. The inflation is sky high. What was interesting was that all the traditional inflation hedges, and I say, quite frankly, almost all of them that I can think, most of them, I should say, really kind of stuttered amid the whole thing. Now, I am a long, I'm long on silver, I'm long on gold, but I own gold as somewhat of a insurance policy. I've always viewed it as insurance, you know, on the fiat experiment. And then silver, to a lesser extent, I'm less exposed to silver, but I still believe that silver has a nice long runway. But it is funny though how it's perennial, that it's always going to go up, but sometimes, you know, or many times it doesn't. I think 2023 is going to be different, and the reason is probably, let me show you a dollar chart that might the linchpin. This is really what it's all about. I mean, this is really what the whole year was really all about, was this incredible ascent of the dollar. And the dollar, we had, of course, we provide ongoing commentary to our members. We provide a weekend report that you talked about with all the different charts. What we were telling our members was that about 120 on the US dollar index would be the peak we would expect to hit. We didn't even reach that. We hit about 114, and then we began to back off. And but that incredible bull rally that we experienced throughout 2022 and as part of 2021 was just literally a lid on so many different asset classes. And now
the wrecking ball.
It's a wrecking ball. And
that's what they called it.
That's right. Absolutely. And many people don't realize that really was what was kind of sitting on top of many of the asset classes, causing them to really suffer in addition to interest rates, but they're all connected. Now, as we fast forward to 2023, Dale, we know that the Fed is looking at a terminal rate of around 5, maybe 5.25. That's completely what we were expecting. In fact, 5 is not really that terrible, as long as it's not there too long. And so what the idea here is that what we're thinking, and this is literally just our analysis, we could be wrong, but we expected this dollar to really hamper the markets this year. We expect that as we move into next year, this dollar is going to continue down, maybe not precipitously, but it's going to continue down. And it may accelerate into the year as rates really begin to come down. And the new low that is set on the dollar may actually provide such a tailwind for precious metals and even for crude and also for stocks that this could actually turn out to be very bullish. So the declining dollar of 2023 may be the big story, just as the rising dollar was the big story of 2022. And if that's the case, then that bodes very well for gold.
Okay, well then let me ask you, what about that statement we could test 120 in 2023?
Yeah, well, I think the thinking there is really the Q1, Q2 uncertainty, because obviously earnings are going to have to come down. Earnings earning estimates and all of this are going to have to come down in alignment, and that of course could cause some pain. But I don't think that's going to happen. I'm just kind of hedging there, saying it possibly could in 2023 go back up, but I don't suspect that we're going to see a break above 120 at all, even in that case.
Yeah, how about down to par and then up to 112, 110?
Yeah, 110, 111. I think that even 112 would be a fine area. Maybe even only 108, 107, 108. It may just get a little paltry run.
Right. Okay.
So next year, I think, is setting up very nicely for a tailwind for assets that benefit when the dollar goes down. That's obviously gold. That's obviously silver. That's obviously oil, unfortunately, and then many other things as well. So I think we're going to get a little bit of relief thanks to this falling dollar next year. Yeah. And I think the dollar could continue to go down even beyond, because really what's happened here is the Federal Reserve has really abused its authority. It's abused, and other nations are very well aware of this. I mean, they've been aware of this for a long time, but this latest punitive action that the United States did with its dollar. I mean, this reckless, poor monetary policy that they've been, subjecting us to and also subjecting the world to has consequences. And I think the dollar could, be the victim of this as we move forward. So I think, as much as we've talked about a rising dollar this year, I think the bigger story going forward is going to be a falling dollar. And so I think that's one of the big things we're watching next year. Now, Bitcoin, I also wanted to show you real quickly this cycle. So I got into Bitcoin, Dale. I was so fortunate to know about it back in 2011. I didn't buy it in 2011, sadly, but I did buy it in 2012. So I bought it the next year after I'd done some due diligence. Paid quite a bit more for it in 2012 than I would have in 2011, but that's not the point. So I've been in it for about a decade, and I've been through all these different cycles. And right now, when you listen to the media and you listen to the average retail investor, they think Bitcoin is FTX. They're convinced that Bitcoin and Bitcoin mining is Sam Bankman-Fried. Like, there's not a lot of separation here going on. And what's actually happening is very common. We've had our layman moment here in this particular bear market. This is a chart showing Bitcoin going back to about 2013. And every 4 years, due to the halvening cycle, you have these really interesting cycles that occur, bull and bear. And so what I want to show you is that if we go back to, say, 2014, where the bull market busts and then we enter into the first crypto winter, you'll notice how long this is. This is a monthly chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 months. After 14 months, it consolidates, the volume comes in and it begins to go up. The halvening comes right around in here, and then it has this nice cycle. Then we hit the peak. Remember back in 2017, we hit the peak back in December, January. So we start counting from the last up candle. So it's right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And then after that 14, we begin to go back up. So we have 14-month bear markets, totally normal, and they're typically 80% drawdowns. Everybody forgets this. So we're in the middle right now of a 70 to 80% drawdown in Bitcoin, and everybody's running around with their hair on fire, not realizing we've been through this story every single time. And if you buy, at the end of that bear market cycle, the last 2 times, you've been a winner. So where are we at now? Well, we had this really nice rally that was, we have to admit, the macro environment did cause all kinds of distortions, even to the Bitcoin cycle. But you'll notice we really peaked out back in November. So November of 2021, a little more than a year ago. So here we go. Starting from there, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So our case, not just using this particular chart, this is just a nice visual for this morning for people to see, but more than just this chart. But when you look at the cycle analysis, what we are expecting on Bitcoin is that we're going to bottom this month or next month. Probably by the end of January, we're going to see a bottom in Bitcoin. It may have already happened, but maybe not. So by the end of January, we would expect Bitcoin to have bottomed, and then maybe a consolidation period, which then finally begins to lift off by April. So when we have the spring here in the Northern Hemisphere finally dawn, we expect that the winter, ironically, of the crypto winter is going to begin to thaw. We'll enter a new spring, if you will. And we're expecting that to be, sometime between January and April. So if you're long,
there will be growth in the spring.
Yeah, I really think we're getting ready to turn the corner on this. And it may even be that Bitcoin diverges from the stock market. They don't always run in tandem. And so it may be that we see a rally in Bitcoin and stocks are still consolidating and meandering and not doing much. So I am bullish on Bitcoin as we head into 2023. I think it will be a winner as the dollar falls, but I also am a bull on gold and silver too. Okay. Those 2 stories are.
Let me ask you about the S&Ps, Jerry. The big question, and what's really kind of become consensus, is that we still need that flush, take out the October low, one more flush under the October low to put in a better bottom. Do you think the October lows are going to hold? Because that would be contrarian to say, no, the lows are in.
Yeah,
and
I would say that based on our analysis, the 34.91 low that was set back in October, certainly could be tested. And if it's going to be tested, I would expect it to come in the first couple of quarters, probably Q1. And so the S&P 34.91. If we fall below that, I would be somewhat surprised. I don't expect massive growth in S&P 2023, at least the first half. But at the same time, I also don't expect some of the spectacular sell-off that we've been hearing from some. Even though earnings have to come down, we've already seen some spectacular damage to many stocks. And to think that we're going to continue to see this carnage, even though the dollar now is no longer rising, and even though that we know the terminal rate on the Fed is going to be around 5.25, and even though, so with all of that now kind of factored in, without some other kind of external shock that's unknown, I don't see the S&P just falling off of a cliff in 2023 as some have envisioned.
Okay, I think the gorilla in the room is Apple, and the lows that we put in this week at 130. If you look at a longer term chart on Apple, I don't know, weekly. That would be a major breakdown under 130.
In fact, that's exactly right. In fact, we own Apple for the long term. We would consider any breakdown. It's funny you say 130. Look at my line here. It's right there.
Right.
Anywhere between 130 and 90 is a long-term opportunity. We're going to double our dollar cost average if we get below 127 or something in that range.
Yeah, like your 112 for the first stop, and maybe the lower end of your zone. So how is the market going to be able to withstand and hold the October lows when such a large piece of the market cap is going to be under pressure?
Well, yeah, but think about Tesla too. That was an increasingly big part of the market cap, and that
wasn't 8% of
no, it wasn't. You're right.
Index. It's apples and oranges. It got as much attention. But not, I mean, everyone owns Apple.
They do.
It's like their flight to it's the new bond. Okay. Their safe money is in Apple. I think that the market doesn't bottom until we have some capitulation in Apple.
Got to shoot the generals. And this is definitely the commander in chief.
It's the president.
Yeah, it's the president. The bubble. So
Mr. President Bubble. Right,
you're absolutely right. Okay, so let's say it dips down back to its 200 weekly moving average. Yeah, you're right. I mean, at that point, you're probably seeing immense pressure on the S&P at that point, obviously, and other major indices. But to me, I would say that represents a golden opportunity because we haven't been there for years. So I would almost be partially rooting. I would almost be partially rooting for that opportunity, and I do agree with you that we've seen so many other major stocks, Meta, for example, a self-inflicted wound, or Tesla, obviously a self-inflicted wound. But with Apple, they've played their cards so well. I was absolutely amazed at Apple's handling of COVID and handling of the supply chain. China. I mean, I was blown away. They handled it better than almost anybody in the whole. So this company knows what it's doing. And they also recently moved out of China, for seeing the writing on the wall, participating in that nearshoring trend we've been seeing with many other companies as well, moving back to the United States. That plays well politically. So I think Apple has got a lot of great brains here. I think they're very well connected, not just to the U.S., but also China. I think that any headwinds that arrive, they may outsmart them. And not saying they will, but I've noticed that Apple seems to have, quite a. They really, not only are they big, but they're big for a reason. They've outsmarted their competition, and so we're
it's hard to find an Apple bear, but there might be a worm in the Apple.
True.
To $90. So just something. I'm keying a low for the market based upon what Apple's going to do. So okay, China's been on fire, Jerry. Have you been buying these stocks?
China's hot.
Really hot. I mean, they're easing, right?
They're easing.
They're ahead of the curve.
They are. Their interest rates were already high. So while we were over here, with 0% interest rates trying to get our economy going, China had their interest rates near 4%, and they haven't lowered them. In fact, China has a lot of room to ease. And so China is another story for 2023. China has already admitted, Beijing has already said that the economy is going to be their primary focus in 2023, after saying for some time that they were more focused on other things, social things. Now, 2023, they are going to focus on the economy. That means they're going to be easing. They have a lot of room to ease. They have a lot of room to cut. And so that's going to be a boon for many oversold Chinese stocks. Remember, Chinese stocks peaked way back when all of the Cathie Wood stocks peaked, when all the high tech, all the low earnings stocks, and it was February 2021. So this cycle for China has been long and brutal, longer than it has been for many of the U.S. stocks. So February 2021, Chinese stocks peaked. We're beginning to see them now come out of the woods. And I think 2023, you'll see some really good gains. And I think about that story. Think about the story of the dollar falling, right, and China rising. Think about the story of U.S. growth slowing in the United States, and then China, even though they're expected to slow in 2023, they're still going to be much, much faster growth in the United States. We may get
diverging.
We will see the divergence, I believe, in 2023, whereas before it's been kind of covered up by all of this excessive policy by the U.S. and a lack of policy, quite frankly, by China.
Any other opportunities with a weaker dollar in foreign markets over U.S. markets? You're looking at?
That's it's interesting. I'm looking here for Turkey. I have a
gosh.
Yeah, I have a chart of Turkey here somewhere. I'm trying to find out where I put that at, because the Turkey ETF, we have a really cool tool that we provide our members. I wanted to show you this. It's called our ETF leaderboard for anybody who likes to do ETFs. And Turkey, let me pull this over. Hopefully you can see this at the top of or on the screen. So this is the ETF leaderboard. And so Turkey has been number one, but Turkey has been number one now for eight weeks on top of our ETF leaderboard. And you can see it's just been running very, very, very nicely. And we had a $32 stop loss on Turkey. In fact, I don't know why I don't see that. I have it. Here it is. There's the Turkey ETF. Okay. So we have a $32 suggested stop loss on this thing. We've been following the 14 EMA. It's really respected. You can see here, the 14 EMA, it's been really respecting that ever since the October breakout. Yeah. Turkey's a hot market. And in fact, emerging markets in general, not just Turkey. There is a chart here that I have of the emerging markets that I think your folks will also find interesting. It's the S&P versus EEM. And you'll notice that the emerging markets, of course, outperformed large cap stocks in the early part of the 2000s. But in 2008, it's been the opposite. So we would expect that emerging markets could have a nice rebound here. Certainly in 2023, we're thinking of, when we think about some of those ETFs that are there, we think of Turkey. We also think of Greece. Greece has been hot. Egypt has also been hot. Thailand is beginning to really work. Italy's been hot for a while. It's been stagnating a little bit. Japan falling after that big surprise move. But Europe in general, so like the Euro Stoxx 50, F.A.C.E, that's also been a hot market. So Europe in general may continue to recover next year. So, those are some markets that we're looking at.
Some great ideas. You want to wrap it with one and then show people how they could follow you and get involved with you, Jerry? As you can tell everyone, Jerry really does some high level technical work, for outside of currency trading, for looking at equities. So, okay, that's a nice chart.
Yeah, I think maybe we just close out with at least from my side with silver. You're absolutely right. We do provide all kinds of member info on commodities, and as well as stocks and ETFs, and then of course cryptocurrencies, options, and all of this, as well as currencies, which we rank currencies right now. And of course, the dollar's been the top, but we don't expect that to continue this year. So it's silver, though, as you can clearly see, this one is itching to break out after years and years and years. And the reason why silver really could run this year in 2023 is because you have a couple of things. A, you have that declining dollar. That's bullish for silver.
Yes.
B, you have the reopening of China.
Yes.
The reopening of China is bullish for silver. And then you have not only the reopening of, then you have EV, of course, that's, solar demand. That's all very bullish for silver. But not only do you have the China reopening next year, you also have China reopening and saying, we're going to prioritize the economy and get it back in shape. So that means that not only are you going to have a reopening, you're going to have a reopening with stimulus, with lots of stimulus, very likely. So that could bode very well for silver next year. So we think that silver could very likely break out above the 27 level. And if you finally get that breakout, then you could certainly run up to 30, 35. And I think that represents a nice, really nice rally. Now, I know there's some, in the silver community who think, no, it's going to 1,000. I heard the joke. I'm not in that camp per se, but I do think that silver is going to be a winner this year. I think it's really going to perhaps surprise some, this year. As well as gold. So I don't want to beat that too hard, but I really want to say that Bitcoin, gold, and silver are going to be big beneficiaries, in my opinion, 2023 because of that falling dollar that we see.
Okay, Jerry. So best way for people to follow you also, there are some delivery problems out of COMEX that spark things this week too. Not enough physical in the COMEX warehouse. So people have been talking about this for a long time. So there you go. Fierce truth, real profit. Love it. Nice tagline.
Yeah. Thank you. Yeah. Followthemoney.com. People can come here. They can check out. We have memberships. We also have a store. Maybe you just want to buy a course. We've created numerous courses on trading and investing and options and all of this. We also have memberships where you can just get access to our research on an ongoing basis. And anybody who's into trading or investing, we also have a coaching call we do with our members every Tuesday morning, so they can come on, ask questions, learn how to trade, learn how to invest. I really appreciate what you guys do, and I really appreciate being invited, because I know that you guys, it's nice to have. I've listened in several times to some of your calls when I'm not been on, and I've just really enjoyed the high value content you guys provide. So I think it's a great thing what you guys are doing. So thanks for the opportunity.
Well, we have a bromance going, Jerry. I want to wish you and your family a very Merry Christmas and a Happy New Year. I think that your work is elite.
Thank you so much.
Okay, really appreciate you coming here and with a giving spirit and sharing your ideas with us to edify our community, Jerry.
My pleasure. Thank you, sir.
All right, Jerry Robinson, everyone. The Twitter handle is at FTM, at Follow the Money.
Yeah, at ftmdaily.com. Okay. I'm sorry, at FTM Daily, at FTM Daily.
Follow the Money Daily. All right, people are thanking you, Jerry. So thanks so much for being here today, and look forward to, we'll catch up with each other in the spring.
Sounds
See how
great.
things are shaping up, buddy.
I'd love that. Thank you.
All right. All right, everyone. That's a wrap for today. You could join the team in about 15 minutes for the morning edge. Remember, don't just count your pips, count your blessings. And we'll see everyone to wrap the week tomorrow for the PCE Live. Adios, everyone. Thanks again, Jerry.